Yo traders, what is good? So, welcome to the CAFX Academy. That sounds crazy to say, but you know what? Welcome. I'm glad that you're here. I'm glad that you've found out about me. And look, I promise you everything that you're going to learn, and even this beginner course is going to be fire, all right? This course is going to be called Mastering the Basics, or Master the Basics, right? So you're going to get a feel for trading. I'm going to teach you the foundations, and yeah, it's just going to be easy. I'm not going to confuse you, right? So to start off with, we're going to talk about the difference between investing and trading. So the difference between investing and trading is investing is long-term. So, you know, like for example, you buy a Tesla stock today and you're thinking about selling it 5 years from now or 10 years from now, when price has gone up from the day you bought it, right? So we're buying low, we're selling high. Now trading's different. Trading's more of a short-term thing. Most traders are done before the day's up. If you're a swing trader, then you'll be in the trade for a week, maybe two. And you know, some swing traders hold trades for literally 3 to 4 weeks, all right? But I count anything over 2 weeks as kind of investing, right? But look, you got a day trader, a scalper, and a swing trader, and then you got investors. Okay, so I'm going to be teaching you how to trade. I'm going to be teaching you how to scalp, day trade, and swing trade, because the strategy that I teach people how to scalp with works on any time frame and any pair. That's the beauty about breakout trading, all right? And also I'm going to teach you a bunch of other shit like support and resistance, Fibonacci's, trend lines, all of that stuff, right? So now you know the difference between investing and trading. Let's go on to an actual chart on TradingView and take a look. You can either use it as your desktop app or you can use it online. It doesn't matter. But the point is you need TradingView. So you can use the basic version, the free version. You don't need to pay for TradingView, especially as a beginner. You don't really need to, right? So this is what it's going to look like. Now, this is gold. Right now it's on gold. You choose over there in the watch list what pairs you're going to be trading. Now you can see I got Forex labeled, indices in gold, and I got crypto. But you can also trade stocks and stuff as well if your broker lets you. But let me just show you an example of an investment versus a trade, okay? A day trade. So let's go to stocks. Let's take Tesla. And let's take a look at Tesla on the daily time frame. Oh, the monthly time frame, fuck it. Monthly time frame. So this is Tesla on a monthly time frame. Now, it's kind of messy. Don't worry about it. All I want you to look at is this area down there, say. So this was Wednesday, the 1st of April, 2020. Now imagine I bought in down there where this white line is. Now this white line is where I bought my Tesla stocks, all right? So I go in with, I don't know, say £1,000 or $1,000, let's just say. If I went in with $1,000 from there, I potentially could have made fucking toolboxes in the way. My bad. Let's do that again. So we bought in down there, and the highest it got to is this wick, this spike up there. That's 817%. So if I went in with $1,000, 800% of 1,000 is 8 grand. So 8,000. So it would have took me, when was this? 2025. Yeah. So it would have took me 5 years to make £8,000 or $8,000. If you went in with 10 grand, you would have made 80 grand. If you went in with 100 grand, you would have made 800 grand. All right, I think you get the point. That's the percentage there, and that's just how it works. Okay, that's investing. It's long term. Let's take a look at a day trade. Like let's go to gold. Let's take a look how gold moves on the 1 hour time frame, for instance. Right. So the 1 hour time frame is considered a day trader's time frame. All right. So let's just say, for instance. All right, I know we're in an uptrend. So boom, we're in an uptrend. Price is going up. So let's just say I decided that yesterday, all right, I knew we was in an uptrend. So as soon as we get a break yesterday of this area, this bit of structure there, as soon as I get a break above it, I'm buying in because I'm in an uptrend. So I buy in on this green candle, and let's just take a little look. I'd be up 2%. So I'd be up 2%. let's just look at it in a different way. Now, if I get in there, I put my stop loss really tight. Let's say 25 pips. Now, let's say 20 pips. I'm a ballsy fucker, me, so I'm going to say 20 pips, right? So 20 pip stop loss on gold. I've just 3 times my money because it says risk to reward ratio is 3.27. That means 3 times. I've just 3 times my money. Now, if I put $100 on it, and I'm using a broker that allows me to use leverage, which we haven't got to yet, but 100 times leverage, okay, 1 to 100 leverage, I'd have £300 or dollars back if I won the trade, and I did win the trade. 1 to 100 leverage. So if you put 1,000 on it, you'd have $3,000 back, right? And it would have took you, let's take a look how long it would have took. So from there to there, it would have took 18 hours. So 18 hours to triple your money. You just seen it took 5 years from an investment on Tesla to 8 times your money. I just 3 times my money in a day. So that's why I like day trading. That's why I like scalping, because scalping's even more crazy. Look at this. This is the time frame I'm playing with. So I know we're in an uptrend. I'm getting in on scalping time frames like this. So I'm just waiting for the break. I'm getting in. You know, this is where it can get really, 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 really good for you, right? So stop loss below that little bit of structure there. Now look at this. If you actually got, you know, the courage to hold these trades. Look at this. So that's 6 times. I would have 6 times my money if I got in on this simple breakout. Stop loss a little bit below some structure. 8 hours. So 8 hours on a scalping time frame. I could have fucking 6 times my money. 6 times my money. Come on now. And I ain't even going to leverage yet. This is just showing you difference between investing and day trading. So I think you get a picture. I think we can be done with that part. So, right. We just got investing and day trading out of the way, or trading, okay? Ah, shit. You know what I forgot to do? I forgot to give you an example on the friggin' 4 hour. All right. So this is what swing traders do. Let's go back. Let me just show you a 4 hour time frame. It's the same exact thing, but it's just longer. It takes you a lot longer to make money. This is like, I'd say out of scalping, day trading, and swing trading, the swing traders are more like the investors of our game. So let's just say, I don't know, we break there on the 4 hour time frame. We've just broken that structure. We get in, stop loss, you know, as tight as you want it, below structure, whatever, but we'll just put it below this little bit of structure there, right? So our stop loss should be red. Boom, that's where we are. Now, we just 3 times our money, okay? Just 3 times our money, like I did day trading. But how long would it have took me? So it would have took me 10 days to 3 times my money. So this is where you got to figure out, what type of trader are you? Do you have the time to be on the charts every day at New York or London session or Asian session? And do you have the time to sit there and, you know, watch it and be very precise and pull that trigger as a scalper and wait to get in and out? Do you have the time to wake up in the morning, place a trade on whatever currency pair or gold or indice that you choose, and then go to work and come back later on and see, oh, I've either hit my stop losses, okay, I took a little loss, or I just won a fat dub? Or do you actually want to like kind of invest, but, you know, stay in a trade for a week, maybe 2 weeks? Because the major differences between scalping, intraday trading, which is day trading, and swing trading is scalping, you're in and out the markets. Like I just showed you, 8 hours, that's actually a day trade. But I'm usually in and out the markets within fucking minutes, sometimes seconds, not going to lie. It depends how volatile the pair is and, you know, how much it moves in my favor. But the risk of scalping is the volatility can go in your favor or against you. So you can be, you know, faked out a lot. If you don't know what that means, don't worry. I'm probably speaking another language right now, but scalping is very, very volatile, very, very sketchy. Let's go back. Let's just take a look on the 1 minute time frame, what price looks like. Look at it. It's doing this. This is what the 1 minute time frame on gold looks like. And if you go to the 5 minute, still a little bit sketchy looking. This is what it looks like. Then you go to the 1 hour, starting to look a little bit cleaner. Then you go to the 4 hour, and it looks really, really clean. So that's the difference between, you know, trading different time frames. If you're a scalper, it's going to be messy. You got to have how do I say, like, confidence. You can't be scared. You got to be very disciplined because it's easy to press buy and sell and revenge trade when you're scalping because we see setups all the time. Then you got day trading, which is more relaxed. You can go to work, get in the morning or in the night whenever you want. Check a day later, maybe 2 days later if you want. Well, not actually. Day trading, you got to kind of be in and out within the day or the night. So, and then you got swing trading, where you're holding a trade from like Monday to Friday, or Monday to the Friday after next, like 1 to 2 weeks kind of thing. So you need to figure out what kind of trader you're going to be. But I advise most beginners to become a day trader and play with the 1 hour charts and the 15-minute and the 30-minute time frames instead of just jumping straight to the 1 minute and the 5 minute, because that takes discipline. It takes a lot of learning. It takes, a little bit of confidence, which you don't really have at the beginning of your journey. But hopefully right now in this one class, I just covered the difference between investing, the difference between trading, because that's all I wanted to do and accomplish in this class was do that one thing. So I feel like I did. Take your time, come back, watch this as many times as you like. This is just you getting a feel for what kind of trader you want to be, okay? But into the next lesson, I'm actually going to show you how to set up TradingView, which is literally the first thing we're going to be doing. I don't want to even help you choose a broker yet where you'll actually be placing trades and, buying and selling. I want to literally show you how to get TradingView, set up TradingView, and what you're going to be using it for, okay? So I'll see you in the next lesson.